Hello, everybody. Welcome to KatKast, the podcast where governance meets growth. I'm Katherine, founder of Katashe Solutions, board member at Axos, and over the past decade, I've worked across finance, technology, and mission-driven ecosystems, helping scale startups across APAC whilst building for digital public goods. So, KatKast is where we explore the real mechanics of innovation, from DAO governance and staking policies to financial inclusion, on-chain education, and future of public goods. So if you care about how systems scale and who they serve, you're in the right place. So today we're going to be tackling one of the most important shifts in global finance, the tokenization of RWAs or real world assets as they call it, and what it looks like, to manage a tokenized equity fund from the inside. So today I have my guest. Hello.
Hi,
Yes, a
thanks for
good old
having me.
friend of mine. Yes, Ted is not your typical crypto bro, by the way. Yes, he comes from the TradFi space. However, he's had he has had projects in Web3 as well. He's a recognized expert across financial structures, and he's operating at the frontier of RWA tokenization as well. And also has an MIT degree. Who doesn't want that? Okay, so Ted, before we get into the substance, do give our listeners a sense of your journey. So you spent years in a hedge fund, PE,
Mhm.
and large ticket sizes. So what pulled you towards tokenized equity? Yeah.
Yeah, so I graduated from MIT, and then my first job was actually a hedge fund that was seeded by Harvard Endowment Fund. So in the past 20 years, I've gone through, investment banking, hedge fund, private equity, market making, all sorts of things, right? Because the regulations have changed so much from 20 years ago to now. There was a Volcker Rule, Frank Dodd Act, all these things. Today, I
Mm,
run Noise Labs. It's a proprietary trading firm, market making, and we do tokenized fund partnerships with regulated fund managers. So we
mm,
started doing more tokenized structures in about 2021 with about 20 million in assets. And today, we are managing and partnering with just below about 500 million across all the different funds. So what put me in wasn't actually like the technology, right? It was a structural observation, right?
mm.
Capital markets have three jobs: capital formation, liquidity, and credibility. The main thing though is that the last one is the most expensive and slowest moving piece of the infrastructure that we have, right? So
Yeah.
tokenization is like the first serious attempt in decades to rebuild that layer, right?
Mm,
So I think the credibility part is very, very important. And my background, I guess, a lot of people were in, Web3, and then they want to go more to TradFi. I think
yeah.
mine is a little bit different, right? Most people in RWA came from crypto and are learning about finance. I came from finance and had to decide whether or not this repackaging is
Yeah.
genuine infrastructure, right? So this inversion
Mm,
matters, right? So my answer, I think it can be real, but only if we stay honest about what's happening and what it's not replacing. Currently I'm watching tokenized treasury scale, right?
mm.
So that's a big thing, right? Whereas a lot of tokenized equity offerings have stopped or stalled, right? So it's the same technology but different outcomes. So this tells me
Mm.
the interesting question is never about the rails, right? It's always about the credibility. Um, yeah, so I really think that
Interesting.
the credibility infrastructure is expensive, slow, and monopolized. And yeah, tokenization is the first serious attempt to rebuild that layer. And I think that's what makes it worth serious people's time, right? I mean, they should look into
Mm.
it. Yeah.
Yeah, thanks for sharing, Tad. Yes, you do bring a very rare vantage point to this conversation because, as you mentioned, most people in RWA do have like a crypto background, crypto first background, and then are trying to learn like the TradFi rails, whereas you have an inverse journey, and then you've chosen to engage with crypto infra. So how let's start from first principles. I like how you mentioned there's three themes to this, right? Like so you talked about crypto there's credibility, for capital formation, credibility and liquidity. Is that how
Mm.
you structure the three?
Yeah, I mean,
Okay.
if layman
Yeah.
terms is people want more money, and then they tell people if you tokenize, you get to raise more money because people can trade trade more often. But I think these two things are so dependent on the credibility, right? So I mean, one thing that you learn in investment banking, where you take the exams for IPO, is like, why do companies want to IPO? Access to capital markets, improve your credibility and public standing. So the credible portion doesn't come naturally, right? I think that part has to take a while to be built, right? Because that is investors' trust aspect. Yeah.
Yeah. Speaking of um, the part where you express like the trust factor,
Yeah.
when you look at tokenized equity structures
Yeah.
today, what is structurally very new
Yeah.
from your
So
lens and what's
I
not?
guess
Yeah.
it's like, what's the, I think you mentioned before, just before this cast, it's like new versus old wine, or, in a new bottle or old bottle, right?
Yeah.
Um, I think genuinely new is that you can have programmable compliance, right? Transfer restrictions enforced at the settlement layer, not just on paper, right? You have composability with on-chain capital pools. You can have 24/7 settlement with near instant finality, fractionalization and near zero marginal cost, right? Those is new, right? But things that are not new, what is tokenized equity today? It's still a private placement with a blockchain skin somewhat, right? The legal rights, the disclosure obligations, the KYC process, a lot of transfer restrictions, they're also traditional, right? So the
Correct.
token is kind of like a better registrar, a share registry kind of, but it's not really a new instrument. It's not like, totally different from what it's before. And this is not a criticism, right? A better registrar or registry is valuable, but we need to be very precise about what we're actually selling, right? So I think a lot of times, when people say tokenization, they will go all out and say, oh, you see, once we tokenize, we are able to raise lots of money, and the liquidity is just there because people can trade, right? But if there's no credibility, then that's one of the issues, right? There's no liquidity, right? And
Yeah.
interestingly,
Yeah.
actually, I have
Yeah.
to say, enhanced liquidity, especially for PE style assets, right?
Mm.
Sometimes the illiquidity is part of the return profile, right? You get paid a
Mm.
premium precisely because you cannot exit, right? So because you
Right.
tokenize the asset doesn't mean it automatically creates a buyer pool. In fact, sometimes when the seller tokenize the asset, they want it such that in the event that they want to transfer, they can do it easily, but they don't want to
Yes.
sell. So if they don't want to sell, you
Mm.
can't have it being liquid, right? Because a lot of these people invest in PE precisely because they think that in the long term it'll give superior returns versus a hedge fund, right?
Yeah, that's an interesting
Yeah,
point that illiquidity in it of itself is a risk
yeah,
premium that's
yeah,
priced in
yeah.
PE. And then, we have the thesis that says like, okay, if you fractionalize and then
Hmm.
you tokenize your assets, then technically it should bring in a higher premium, and reduce that illiquidity issue, right? But
Yeah,
but
I
then
think tokenization gives you the
it's
liquidity optionality, right? It doesn't
optionality.
necessarily,
Yeah.
yeah, it's the optionality, which is, great, right? That doesn't 100% means that it's pure liquidity, because you get a
Correct.
cleaner transfer pathway, fractionalization, you get a
Yeah.
potentially larger investor base, right? I think you also have to think about in the traditional sense when you do transfer of shares in a fund structure, it's
Yeah.
not that easy, you have to do a lot of paperwork, make sure things are signed, and then people fill up the forms wrongly. There's so many things that might happen along the way.
Yeah.
So
That's
yeah, it,
true.
it, it takes like a month or two to complete the paperwork,
Agree.
and by that time the market has moved, right? So a lot of
Mm.
times the LPs in private markets, they are long-term holders by design. They don't want frequent
Mm.
trading, but they value the option of transferability, so that they know that the asset is movable if needed. That's the honest pitch, right? So
Mm.
how can they reduce friction about ownership transfer, and effect a transfer quickly when they want to sell. Yeah.
Yeah. You're right. By design, yes. PE market PE participants are long-term holders, and I agree with you that the share transfer agreements take a while to draft out because first you need to like see whether it's in line with like the fund policy to transfer and depends on the board approval, and then
Mm-hmm.
your corp sec on each side has to go in effect and approve the resolutions for, so there's a lot of steps, and
Mm-hmm.
and programming that
Mm-hmm.
in into a smart contract.
Mm-hmm.
I don't know. I just find it very difficult considering market conditions can change quite quickly, and how do you account for all sorts of different market conditions? I'm just curious to know your thoughts, like legally
Um,
and structurally, how would that
Yeah,
work?
so
Yeah.
legally and structurally, I guess this is kind of a bit of the weak link in some of the current structures, right? The gap between what the token represents on chain and what the holder actually owns off chain, right? I think some of these depends on the venue credibility, right? So obviously, a lot of people wanted to, was hoping everything would be on a DeFi exchange, right? But
Mm,
if it's a token listed on a permission venue, and it's like kind of backed, pseudo government backed, that helps a bit. And I guess the other thing would be about custody, right? Who owns the keys, what happens when people
mm,
disagree, right? So I think we are somewhere in the middle right now, depending on the asset class, right? And I think the certain parts are quite transformative, right? I still think tokenized treasuries has, done pretty well, right? Because the asset credibility is there. If you look at BlackRock's BUIDL, Franklin
mm,
Templeton's Benji, Ondo, these are good examples to show, what it can potentially, look like, right? Maybe blockchain is just a better settlement rail, right? Um,
yeah.
yeah, so the technology is, I think, is way ahead of the trust infrastructure right now, right? And then the adoption will
Mm,
follow the trust, not just the code, right? So yeah, it's not easy to program, certain things, but I think if the trust factor is there, adoption will naturally follow, right? Yeah, so
yeah.
I think maybe we can
Mm,
talk about, the different jurisdictions and stuff like that, because it's really quite a broad question, and depending on each
yeah.
jurisdiction, yeah, it would be a bit different, right?
Yes, yes, let's get into that. Yes,
Yeah,
because like that's one of the biggest gaps, right, between the RWA promise to
yeah.
fractionalize everything and operational reality of fund managers. So, a tokenized equity fund doesn't just live in one jurisdiction, right? It touches a
Mm-hmm.
lot of areas: securities law, digital asset frameworks, custody requirements, as you mentioned, investor protection rules. Like
Mm-hmm.
how okay, us being Malaysians, maybe
Yes.
you want to give a view on the various jurisdictions you've had worked in. Like how would you best structure, if you had to structure a tokenized equity fund, what would be the most legally defensible, most attractive jurisdiction? Is there like a
Yeah,
best space for you today? Yeah,
there's always this issue where the fund is structured and where the investors come from, right?
yeah.
So every country only has regulation within its own, country walls, right?
Mm,
But if we look at just the, bigger jurisdictions, right? Singapore, Hong Kong, Cayman, Luxembourg, and all this, right? Uh, Basically depending on the investor base and underlying asset, right? The defensible structure usually has three layers: a fund
mm,
vehicle in a recognized financial hub, a licensed manager, and a clear legal pathway from token holder to beneficial interest,
mm,
right? So
yeah.
currently, Singapore, I think, is pretty strong because you have the MAS great regulatory clarity with
Mm,
flexible fund structures. The VCC framework gives you some sort of genuine optionality on share classes and distribution. Uh,
mm,
the Dubai or UAE, where I also have office, DIFC has really moved quite aggressively in some aspects as well. They also
mm,
have frameworks for tokenization, rather than trying to ban legacy structures and categories just to fit it, right? Um,
mm, yeah.
Cayman also still has a lot of crypto native capital, but sometimes might not be so well suited for strategies that you need some regulatory visible legitimacy. And if you want to target European institutional distribution, Luxembourg is still the main reference point, right? So I
Oh,
think
okay.
there's no one best base, right? There is probably
Mm,
a best base per investor channel where you're trying to target your investors. And I think most serious structures have to end up building something that's multi-jurisdictional just by
mm.
necessity, right? Yeah.
Yeah, yeah. You're right. Do you have any views on Malaysia as a jurisdiction, though?
Um,
Considering you have interests
hmm,
there.
Malaysia as a jurisdiction, I think you need to basically talk to the regulators to come up with to do a bit of education with them, right? To kind of work things out with them. I mean, I do like Malaysia because they always take a more cautious approach, right?
Mm,
Some people do not like it, especially those that come from the crypto Web3 background, because they think they want things to just move fast, right?
fast.
But I
Yeah.
think sometimes, you can do something fast and then it just falls apart, right?
Mm,
So I think Malaysia, obviously Malaysia is you can do things that might be Sharia compliant in the future. You
yeah.
target quite a large Islamic market, right? I think the regulators here are very willing to listen and learn, but it needs more people like you, Catherine, to come and do education, right?
Yeah.
The
Ecosystem
initial
growth.
part, right? Yeah, initial part of a lot of these things came from just pure marketing background, right?
Mm,
Let's talk about, like, say, Singapore, right? Singapore, they have MAS Project Guardian. They came up with all this digital exchanges and tokenization and all these things, right? And
yeah.
the MES approach is very serious, it's very good, right? It's kind of like doing some live cross-border tokenization pilots with real institutions, right? But I don't know if you remember, I'm not even sure if I can say this on the podcast, but I just keep it factually true. There was
Okay.
even things like, DBS Digital Exchange. Do you remember
Ah,
that?
yes, yes. It's still live
Right.
though? Yeah, it's still live.
Yeah, so it's kind of funny, right? So, like, when it first started, Singapore is a very private banking led, kind of thing. So they'll
Uh,
be telling all the clients, oh, we can help you trade Bitcoin, all sorts of Web3, crypto, all sorts of things, right? But
mm,
you see, Singapore did issue a lot of the licenses out, right?
yeah.
But I always find it funny that the DBS Digital Exchange doesn't even have its own website. It's actually a sub page on the
Ah,
browser,
okay.
on the thing. And I actually just checked up on it right before this podcast. So if you go
Mm-hmm.
to the official MES website, the
Yeah.
e-services for registered, the link does not even work anymore for the DBS Digital Exchange.
Oh, so
It
you're
goes to
saying
a
they're not.
it
Oh,
goes to a 404 error. So I mean the
oh,
license got given out, but I guess the private bank or the bank itself just decided that it's not worth their time to even have a basic website on it, right? So
mm,
that's one of the dangers, right? Where if you have a jurisdiction that they move very fast, right? They don't really understand everything they want, but they're willing to try. That's good for some aspects, but you know when these things like, even if the website is not up, then kind of affects the
yeah,
trust portion, right? You
I
know,
see.
like if I'm a client of the DBS Digital Exchange and I can't find the website anymore, then that would definitely affect my trust and credibility, right? Yeah.
Yeah, yeah, I hear you on the
Yeah. Can you
website.
pull up the browser and share your screen and try to find it?
I have to probably do it on laptop. Yeah,
Yes.
because
You
I'm
can
streaming
try it
from
after
mobile.
this. Yeah.
So yeah,
Yeah.
I'll try it after this. Yes,
Yeah.
but it would be fun to do it on a live stream actually to
Yeah.
figure this out. But yeah,
Yeah.
I agree with you. Like Singapore has been at the forefront of digital asset licensing frameworks because they've done a lot of sandboxing
Mm-hmm.
and consortium led
Yeah.
pilots
Yes.
with a lot of yeah, tier one counterparties. Yeah, as you mentioned, DBS Bank is one of them. And
Yes.
interestingly, when you talk about like licensing, right?
Yes.
I feel like MAS is actually ahead of the curve because they've done a lot of work in terms of maturing their
Mm-hmm.
legislation, and so it came to the point where there was a lot of like media hoo-ha about the FSMA
Mm-hmm.
regulations,
Yes.
yeah, and
Yeah.
having like yeah, operations
Yeah.
in Singapore. So as a result, I think like the out of the top three crypto exchanges,
Mm-hmm.
Binance and
Mm-hmm.
Bybit actually moved their headquarters to Dubai, and only
Mm-hmm.
OKX
Mm-hmm.
was the last exchange standing in
Yeah.
Singapore, and then they
Yeah.
had a huge party to like commemorate that
Yeah.
in conjunction with SG60. So I'm just curious, like how has Singapore's
Mm-hmm.
regulatory environment helped shape your operating model? You also mentioned VCCs, right? So I'm just
Yeah.
curious, how that's helped with that?
Yeah, so I think, because everybody hopes that, the regulations just let them do whatever they want to do themselves, right? Within that doesn't affect the business
Self-regulate.
model. But it's going to be as I said, a multi-jurisdictional model, right? I mean, certain jurisdictions will be better for certain things, and certain jurisdictions are going to be better in other stuff. I mean, that's why I operate out of, Singapore, Malaysia, Dubai, and then I'm always trying to, make sure that if I go to the EU or US, what are the latest, regulations and things you have to do for compliance, right? So I think if you are a firm, you need like a well-designed framework that is global. That's the most important part, right? It's, if for example, if you are looking at the EU, right? My car there has some scope, right? A lot of jurisdictions to satisfy. The US is, doing something a bit different, right? By effectively regulating by enforcement, right? So it slows the adoption domestically, but it pushes the innovation offshore, right? Which ironically accelerates the category globally, right? So I think first, if for me it's a bit different, right? When we do a
Yeah.
normal fund, it's like a
Yeah.
traditional fund, right? You have traditional things that you're investing in, you have traditional investors, right? So what you're actually investing in is traditional private equity stuff below. It can be, a part ownership in a data center. It could be a part ownership in, SpaceX or Discord, which you are also investor of, right?
Yes.
Yes, thanks for your support.
Yes. It was a
Yeah,
first
yeah,
hand into venture building with, yes,
yep, yep,
in
exactly,
a
exactly.
tokenized equities
Yeah.
project. Yeah.
So then after that, it comes the tokenization part, right? So now that, when things are tokenized, you know that, if you do want to exit, it can be faster, right? But, it still depends on, buyer and seller, right? Seller wants a good price and the buyer wants a good price. And it depends on whether the seller wants to actually hold it for the long term, which actually a lot of people do, right?
Yeah,
Yeah,
yeah, and
yeah,
exactly. And speaking of like, the exit path to liquidity,
yeah,
it like my thesis was that when Katash like started our
yeah,
Discord project, we were like, okay, I think
yeah,
I think with RWA we could exit through the open platforms
yeah,
and that support tokenized
yeah,
equities and I did my research and we were comparing notes. It was very
yeah,
difficult because it's up to the platform issuers themselves to
yeah,
list
yeah,
tokenize Discord shares and create that
yeah,
that liquid markets
yeah,
and so like you say the buyer pool, willing buyer, willing seller, and there just wasn't
yeah.
enough of a market in the tokenized equity
Mm-hmm.
space. So I was a little surprised and shocked, to be
Yeah.
honest. I was quite optimistic, and actually the traditional IPO route kind of beat us to it, right? When Discord,
Mm-hmm.
the Discord IPO news came out,
Yeah.
and I think their filing window is like what, this year? Yeah,
Yes,
was
yes, yeah. So I think it's a bit like just think about standard goal, right? Sometimes people will be like, oh, in the event of a recession, people want to buy gold. So what's the
yeah,
traditional way that people buy gold? Your parents or a lot of people in India, they just buy physical gold, right?
right.
But when they buy physical gold, when they trade in, the spread is actually quite large, right? So then people will be like, okay, we can buy gold bars or gold coins, right? You can buy it maybe in like Hong Kong or wherever, proper gold bars from Hang Seng Bank and all this. Then it comes down to storage. What happens when I have all these gold bars? Do I keep it in the safe? Do I keep it
Mm,
with the bank in the storage? You keep it with the bank, you have to pay them a fee for storage, right? But if you keep
right.
it yourself, some people might be, oh, it's cheaper. But the problem when you keep it yourself and when you want to sell the gold bar, even though it's a standard unit, I'm not sure if I've gone through this because I've done the research on it. The bank
Mm,
will then charge you a fee to test the gold bar, because how do they
mm,
know that you didn't scrape a little bit of gold off, right? You bought like 100-gram bar, but it's 99-gram back. Is the purity the same and stuff, right? So
right.
there's quite a bit of transactional costs in between, right? So it's things like that it's sometimes people might be thinking like, why is tokenized equity moving so slowly? It should be like way faster, and there should be so
Mm,
much more liquidity. But I would think it's the same as sometimes like people that buy and sell gold. Like my parents, or your parents, they buy gold and they don't want to sell it, right? So maybe it's only
mm,
when like the derivative markets on top of this, go on, right? When you have gold futures and stuff like that, you have more people coming in to market make on top of this, that you will see
Yeah.
some sort of liquidity. But to the layman investor, I don't think, they know how to trade gold futures anyway, right? So they still go and buy traditional gold, and they are very happy to, pay the spread, as long, the price moves, way more than the, amount that they bought. Maybe they bought it like 20 years ago at a, at a much cheaper premium. This is why, like, if you go to old estates in Singapore or Malaysia, you realize there's a lot of gold shops there that don't seem to
Yeah.
sell much or whatever, but they make a lot of money still, right?
Yeah. And there's
Yeah.
that consumer behavior that's quite sticky. Yeah.
Yes.
And
Yes.
very, yes.
Yeah.
Like reliant on like seeing, feeling, touching the actual asset, physical
Yeah.
asset. Yes. Whereas
Yeah.
for some of us, we've taken a leap to Bitcoin as like a digital gold standard.
Yes.
But
Yeah.
then again, it it is really dependent on the target audience. Yeah.
Yeah.
In
Yeah.
terms of like the asset class, like I'm kind of like in between the spectrum because I
Yeah.
invest in like unit trusts for gold, like since
Yes.
BlackRock has a retail gold fund.
Yeah.
But
Yeah.
like I can the leap to derivatives is something still quite new for me because
Yes.
like there's crypto perpetual instruments which are quite popular, but
Yeah.
even I'm like I'm scared.
Yeah.
it's, it's a very
Yeah, so
scary
so I
instrument to
think
me.
I think that's why it's like we really got to see, like, who is actually buying these things today, right? Who are the
Yeah.
investors? How you going to go out and raise money, right? That, Catherine, that's what people hire you for, right? To give you the honest truth, right? Um, I give you the sanitized version of the story, right? I don't know whether your
Mm.
listeners like it or not. Well, when we first started in 2021, right?
Yeah.
The composition
Noise
of
labs, you mean?
yeah, I mean, when I first started doing tokenized, equity, in the
Yeah.
funds and all that stuff, the composition of capital in the space is not what people assume, right? It's not like
Yeah.
you tokenize it and then, money just flow in, like magically, right? Because people are
Mm.
using Bitcoin and Ethereum and they have, billions and billions and they just come in and invest, right?
Mm.
At that point in time, all the private bankers were just jumping onto crypto and calling themselves Web3 experts, selling
Mm.
Bitcoin or whatever product the flavor of the month was, right? And then when the market turned, most of them just disappeared from the sector entirely. So who are
Mm.
the real buyers, right? The real buyers are actually a smaller, more serious pool of investors, right? Even up to today, I see them, right? So they are actually family offices and high net worth individuals, right?
Yeah.
Potentially, led by people who are younger, right? They're already thinking structurally, right? Crypto native funds that understood the rails, some sort of patient institutional allocators, right? So actually, these are the people that we grew with from, about 20 million to less than 500 today, right? So
Mm.
today the profile has matured a little bit, right? Three groups, right? Crypto native funds looking for yield beyond DeFi, they come in and invest. Family offices with entrepreneur, background, they're willing to look at new stuff. And actually just high net worth individuals with prior digital asset exposure, right? People that make money in the Web3, right? Yeah.
Mm.
So
Yeah.
institutional capital like pensions, insurance, sovereign wealth, endowments, yeah, they're interested, but they're going to be slow, right? Because the first
Mm.
question is not like, is this the new exciting thing that they must invest in? Maybe initially, yes, they have to show that they are forward thinking, right? But now it's
Yeah.
all about, does this fit with our operational and legal framework, right? And a lot
Mm.
of tokenized offerings, they kind of fail at question one, right? Because they come in and they tokenize, a fund or product or whatever real world asset underlying, just thinking that this is just for them to get more money and get access, right? The credibility
Right.
part and the operational legal part is quite expensive, right? So
Mm.
if you're not doing this like long term, day in, day out, keeping up with the regulations, it's hard to actually get these investors to be interested, right? Because it's not like a one time you do it and then you get in the money and it's done, right? You have to continuously, keep up with compliance, KYC, not just in your jurisdiction, but a global jurisdiction, right? Yeah.
Mm.
So I
Yeah.
think so far
Mm.
the whole process kind of has matched my expectations somewhat in shape, but not the velocity, right? I thought that, maybe family offices will move faster, right? But sometimes, the bottleneck is not really because of the interest. Even if the family office have a younger generation, right? Next gen
Yeah.
leading the family office, very interested in this. Sometimes the CFO comes from a more traditional background, right? And if you can't answer their question or they can't understand basic questions about custody, recourse, how do auditors, treat, the accounting standards, right? Then it's hard, right? So because nobody
Correct.
has actually sat down with them, right? Taught them about the difference between RWA infrastructure, and the trade finance infrastructure. Beyond the fact that maybe some of these guys came in and are just trying to sell them a product, or someone who is from a Web3 background came in and then, doesn't understand the TradFi space, right? So they can't educate the more traditional CFOs, right? So I think education is a very big important of establishing credibility, right? Yeah,
Yeah, and that comes under the yes, the credibility part before formation,
yeah,
right? And for but okay, even before the CFO conversation happens for
yeah,
diligence, like what is the pitch that actually lands for these family offices or high net worth individuals? Like, is it the yield? Is it the liquidity optionality that we talked about, or
yeah,
they just want to do a more alternative assets portfolio diversification, or just yeah,
yeah.
being crypto
I think
curious.
it's the same
Yeah,
as what I said before. The pitch that lands is actually not a pitch, it's just education, right? So,
right.
what I have found, yeah, across like, hundreds of private conversations with family officers in Asia or Middle East, right? Most of them are receptive, right? More receptive than the market thinks. But it's only if someone sits with them and explains to them what RWA actually is, right? So the education aspect is very, very important because once they understand, then, you know, they will be, receptive to do the investment, right? But I think it's not 100% just all about you and whatever the return profile is they just have to understand what they're actually investing in first, right? Yeah,
Mm.
yeah,
Yeah, and I think that brings us to the question on handling trust gaps. It's about
yeah,
to
yeah,
trust maximize, you have to increase education, I suppose. Like you
yeah,
mentioned that CFO who maybe he's more used to traditional like share certs and that
yeah,
Bloomberg terminal, and whereas what crypto users are looking at like CoinGecko or CoinMarketCap,
yeah,
and using different tools.
yeah,
Like how do you like I'm just curious in terms of education, how would you envision the programming to look like? Because in university we
yeah,
don't learn these things. So right
mm,
now the current education pathways are a lot of like learning on the go, learning
yeah,
on the job, and
yeah,
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 I think like my thinking is
yeah,
and you can help validate is to have
mm-hmm,
like self-regulating type of industry
mm-hmm,
bodies to
mm-hmm,
issue
mm-hmm,
micro credentials that finance professionals can upskill themselves with, because there's just
mm-hmm.
no they don't have time to go back to school for this. I'm just curious to know your thoughts on this. Yeah.
Yeah, so okay, I mean, yeah, for how do you get the pitch that lands? I did mention education is one. I guess other ways that you can get access is probably like if you can get them some sort of you know access which is not liquidity, maybe if you have something that's a private equity or private credit that they couldn't touch previously because of some sort of minimums, operational friction or geographical barrier, right? So for example,
Mm,
if you have more access to SpaceX or whatever, they want to invest in it no matter what, right? Or they can't meet the
I
minimum,
see.
then they're happy with the tokenization, right? Yeah. So I don't think it's because it's I don't think they will invest just because tokenization as a feature in itself, right? I don't
mm,
think any LP would have written a check just because something was tokenized, right? They will still write checks for the underlying and the trust and operator. So talking about this education aspect, right? I think what doesn't really work would be like, white papers or explainer videos or, things that say, oh, this is an innovative product. Because this requires them to do a bit of self-learning, right? I think they like the private conversations, the sit-down sessions, right? They like
mm,
things that, a regulated manager, not just a token issuer, like a licensed fund manager, which, I work with, a name custodian that they can actually Google. Sometimes brand name is still important. A legal
yeah.
opinion from like a recognized firm, what the token actually represents, right?
Mm.
So I think the goal is to make them feel that the tokenization part is actually invisible to them operationally. right? They should feel like
Right.
they're just investing in a fund, right?
Mm,
And the token is just how units are registered. Um, yeah, so I think really is a bit of work, but
mm,
the private teaching sessions with the family officers, the sit down sessions, right? I mean, if you do a private class, you take the lead, I'm sure a lot of people will be interested to, sit down a structured program where you go through and teach them versus tell them go do this online course themselves, right? Because that requires a bit of effort on them to actually start, right? To do it, right?
uh,
The CFO is like, why do I need this, right? You should teach me, right? Yeah,
yeah, that's a
yeah,
good point. Yes, maybe
yeah,
we can do a session leading up to Malaysia Blockchain Week in
yeah. We
July.
can for sure. Yeah,
Yeah. Okay. So moving on to secondary market liquidity, right?
yeah,
That's supposed to be like the most cited benefit of tokenization.
yeah.
So in practice, technically, is that a functional secondary market for tokenized equities today, or do you think this is still very much a work in progress?
Um, I think it's still kind of OTC, but just say with better plumbing, right? Because it's
Yeah.
useful, but it's not really 100% a continuous order book, right?
Yeah.
And this will change, right? Not just because the technology will improve, but I think it's just more when credible assets are tokenized on enough credible
Mm,
venues, right? Then the natural buyer
right.
pool will start to form, right? So this
Mm,
is like a chicken and egg problem, but I think this category is slowly solving itself now. With all the tokenized treasuries that is coming up, it does show genuine on-chain velocity, right? Just because the underlying has independent credibility, and the buyer pool already exists on-chain already, right? So that's why, yeah,
yeah, that makes total sense. It's like the SpaceX example. I did
yeah,
notice some RWA platforms shouting
yeah,
SpaceX from the
yeah,
rooftops.
yeah.
Uh, okay. So APAC, as we talked about earlier, it's often cited as a high potential market for concentrated private wealth, especially in Singapore. And then you have these very tech savvy, like
Mm-hmm,
second gen, third gen,
mm-hmm,
high net worth individuals and
mm-hmm,
family office folks, and there's this generation, younger generation of investors
mm-hmm,
already comfortable with digital assets. So what's
mm-hmm.
your read on where exactly appetite is strongest in Asia, and where do you think, like, yeah, people are a little bit resistant? Yes.
Yeah, I think for me, I widen the lens a little bit. I think Asia and the Middle East together combined is
Mm,
where most of our growth have come from. I think if you just look demographically, right, in the Asia or Middle East, in certain areas, you just have a lot of young people, right?
yeah.
Compared to like maybe EU, where it's more of a, older
Aging
generation.
population.
Yeah, aging population,
Well,
exactly,
then
right?
Japan also has aging population.
Yeah, true, true, true. Yeah,
Singapore too, our fertility rate.
yeah.
It's,
So
yeah.
I mean, a
Yeah.
lot of the investors in Singapore are not from Singapore itself anyway, right?
Yeah.
Yeah.
Therefore.
So the family offices across both regions, I actually think they are quite receptive as long as someone sits down with them, right? I kind of like the Middle East because you can have this sit down conversations with them.
Mm,
In fact, in Malaysia as well, I think it's also pretty good because you can have the sit down sessions with them. Sometimes in a place like Singapore, things move so fast, right? That you can't really have this, private dinners and conversations and longer teaching sessions, right? It's just hard to get a venue where a private bank's not involved trying to sell a product, right? Yeah, so I think the capital will actually track a regulatory clarity, right?
yeah.
The investors doesn't need to be sophisticated, right? Wherever the
Mm.
rules are going to be more clear, the capital will move, right? And as long you focus a bit on the education and people feel there's a trust, then you get some traction from there. Yeah,
Yeah, 100%. And this brings
yeah,
us nicely into inflection points for mainstream adoption
yeah,
of RWAs. Like,
yeah.
yeah, we talked about this despite the momentum, right? Tokenized equities is still kind of
Mm-hmm,
pre-mainstream. There's still
mm-hmm,
some structural regulatory
mm-hmm,
barriers that haven't been totally resolved. And
mm-hmm.
in your view, what are like the two, three like very specific breakthroughs that need to happen in this space that can help accelerate adoption in the next, like, yeah, year or so?
Yeah, institutional grade custody, right, would be
Ah,
great.
we have
More,
Bitco
more.
for that though.
Yeah, yeah. So it's
Yeah.
either the incumbents like State Street, BNY Mellon, DTC, right? These are
Mm,
really the old names, right? they either they move or the crypto native custodians actually reach the bank equivalent operational maturity, right? I think both paths are in motion. So eventually you will get there, right? Probably, a regulator sanctioned venue, not some sort of pilot, right? Where tokenized securities trade with the same legal standing as a listed security, right? That would be great, right? And I think maybe we need to see the first major legal dispute, right? You need
Yeah.
the first major legal dispute reach its resolution, right? So it seems a
It,
bit counterintuitive that,
yeah.
I want like lawsuits to happen or whatever, but you need precedent, right? Because right now every structure is assessed from scratch, right? And there's no case law. So, once you have a clean
Yeah.
judgment, whichever way
Mm.
it lands, right? Once you do that, then it gives everyone a baseline to work for, right? Then
Yeah. Speaking of which, like,
maybe one last point, maybe
yeah.
the industry needs like a bit less few, like I think it needs less product sellers, right? And more
That's
educators, honestly. Yeah, really, I think like if you want to be in this space, you have to be in this long term, right? I'm not
yeah.
doing this because it's, giving me, like more gains or whatever. I do really believe, in the future of this industry, right? So I
Yeah.
feel like education is very tiring, right? There's no immediate benefits at all, but
Yeah.
maybe I can tell my kids one day that, oh, see, I did the first thing long time ago. Maybe I have a Wikipedia article on me or something like that. Yeah, yeah,
Yeah, no, you definitely made history with the Discord
yeah, yeah,
project. So
yeah,
I hope we get more
yeah,
news on it soon.
yeah,
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 and it's something that Katashe was very happy to participate in and be
yeah,
part of history.
yeah, yeah,
And I'm thinking like what you mentioned about
yeah,
custodian, institutional grade
yeah,
custody, right? Like, and it's something
yeah,
that people kind of don't get unless you're an institution
yeah,
yourself. It's like this ethos in
mm-hmm,
DeFi communities or open source
yeah,
communities, like, oh, your own keys, your own coin,
yeah,
and so everyone's more pro self
yeah,
custody.
yeah.
So, can you explain to me, like the viewers, like, okay, why we actually need custodians when, yeah,
I
technically,
guess it's more of
we
like
have to,
the
yeah,
trust aspect anyway, right?
yeah,
If you have your own keys, your own coins, but you're a family office, who in the family office holds the keys, right?
right.
Sometimes
This
it's
check
better
and
to
balance,
outsource, not to have everything within yourself. Because as I say, you need
yeah,
the larger investors coming in, not necessarily the smaller ones, right? So if the larger ones comes in and the market grows, then yeah, the smaller ones can come in and hold their own keys, right? So I think once one of the more crypto native custodian, if they can clear more institutional audits, right? SOC 2, ISAE 3402, regulatory inspections, insurance coverage, at scale,
yeah,
right?
insurance
Then
coverage, yeah,
then they can the legacy custodians lose structural advantage, right?
mm,
So I'm not predicting that the incumbents are going to be replaced by these crypto native custodians, right? But I want them to be forced to respond, right? And this is what the
yeah,
category actually needs, right? So State Street, BNY, DTC, they have the balance sheet, they have the client relationships, but they don't have the urgency, right? So that's why they're not
yeah,
innovating. So the crypto native custodians need to really provide the urgency for them to up the game, right? Yeah,
competition, yeah, for them to
yeah,
innovate. That's true. And your point about legal precedent. Honestly, when
yeah,
you said that, the first case that
yeah,
came to mind was the FTX bankruptcy case, and it's all
yeah,
governed by bankruptcy laws. And
yeah.
tokenized exchange also went through bankruptcy proceedings. So
Yeah,
I'm like, okay, is there no other
yeah,
precedent beyond bankruptcy proceedings? Right? We probably need to
yeah,
see more different types of disputes.
yeah. I think I see a lot of people doing this, like cross-border tokenized private credit structures, right?
Uh,
So I feel that the first dispute that might come in the near future will be more of underlying defaults, and the token holders discover that the recourse is unclear, right?
yeah,
Maybe the
correct.
SPV is in one jurisdiction, the holders is in another, the asset in the third, right? What is the legal contract? What's the which laws are you using in which courts, right? You know,
Yeah.
so yeah,
What
I think
disclosures were made.
yeah,
Yeah.
yeah. So we need to see which court is going to hear the dispute, what law it governs, right? Because you could you could write anything on a piece of paper or a token, right? But ultimately, when something defaults, right, you want the assets back, right? You don't want the token or the piece of paper anymore, right? Yeah. So
Yeah.
yeah, I'm
Yeah.
hoping that we welcome the first dispute, right? Rather than fear it, right? Yeah,
I
and
know.
then the
I'm
category will mature through precedent, right? Yeah.
yeah, I was curious, like uh, I suppose like with all the recent DeFi hacks that have been happening, like with Drift and with Kelp DAO, like the hacks run in like hundreds of millions of dollars, right? And I'm
Yeah.
just curious why there's been no enforcement. I know, okay, probably because it's hard to really identify the hacker. That's
Mm,
probably one reason. I'm just
mm.
curious, just thinking out loud, like why there hasn't been why there
Yeah,
hasn't been
I'm
much
not a lawyer.
action
I'm not
there.
a lawyer, so I can't. I mean, I do
Yeah.
have some legal knowledge, but I'm not a lawyer, right? I think sometimes it depends on like civil versus criminal law, right? So
Mm,
what I'm discussing is more civil, right, than criminal, right? I think when you're
mm.
talking about hacks and all this, it's about criminal law,
Yeah,
which is
yeah.
very different. You are hoping for government or a party to come in and enforce. But I think some of the
Mm,
original crypto native guys are, we want to own our own keys. We want to be totally
yeah.
decentralized. So they don't really, who has the jurisdiction to enforce that, right? That becomes
Right.
a difficult part, right? Yeah,
Yeah, yeah, totally.
yeah,
Okay. I think that's a good segue into the three themes that we had from today's conversation. The first one is capital formation. The second one, we
yeah.
talked about credibility being the true trust currency of this market, right? So, having people like yourself in the market, like actively
Mm-hmm,
participating, contributing to fund structuring, really represents the kind of institutional credibility that RW space needs more of.
mm-hmm,
So we do, yeah. So the tech is there. It's just really like how do you build out that trust infra, and you also
mm,
talked about the legal structure
mm,
of tokenized equities. Like how does it hold up in
mm,
court? How does it go through regulatory reviews? And I suppose that comes under credibility as well, right? And
mm-hmm,
then we talked about liquidity, and I think that comes in with the adoption curve and buyer pools. And this is a kind of like an interesting question. Like RWs are meant to democratize the market,
yeah,
but you do have some restrictions, right? Like in Singapore,
mm-hmm,
for example, it's only available to accredited investors. So
yeah,
then that kind of pushes like the retail market to other
mm-hmm,
options that are open
mm-hmm,
source, like DeFi platforms and whatnot.
mm-hmm.
Like, what are your thoughts on this, right? This adoption curve happening, and then like, can you speak a little bit more to like the capital formation bit? Yeah.
So yeah, your main question is there too much regulation that it doesn't democratize finance? I think we all live in the world where we have to pick a place we want to live in, right? We don't
Right.
like exist in the ether and stuff, right? So of course you can flout the rules and you can go and invest on DeFi or whatever, but it's kind of buyer beware, right? So I
Mm,
mean, if you're you live in Singapore, you want to invest in a product that's regulated in Singapore, you kind of have to follow the rules there, right? Um, but I think it's still giving the investor options, right? Um,
yeah.
yeah, I don't necessarily think more rules is necessarily bad.
Mm,
I mean, some people might disagree. It's like, some people might be, I want to be able to smoke anywhere I want, right? Why are you implementing rules on me, right? Yeah, but I think, as long there are more options, it's good, right? So I think one thing that maybe, people don't understand is I feel like the tokenization is not really like a product, right? It's more like the
yeah.
infrastructure shift, right?
Mm,
And you don't super need to have a strong view on it, like whether or not the exchange, whether they use electronic order books or not order books or whatever, right? Does it affect you, right? The question is when things change, the infrastructure arrive, right? Whether you are positioned that you can take advantage of it, right?
yeah.
So I still think that's why education is important because it's like how you do investments, right? From before to today is also very different, with the advent of mobile phones, right? I think a
Correct.
lot a lot of the smartphones, the first iPhone came out in 2008 or something, right? It's
Oh,
not
did
even that
it?
long ago. Yeah.
Okay.
Yeah. So before 2008, it was
Yeah.
BlackBerry and all these things, right?
Yeah.
So how would you, place a order or something like that, it's maybe it will be through a web portal, or you use a token, not through a phone using a thumbprint, right? Or some sort of verification module, right? Yeah, so imagine investing before, right? It could be very paper driven. Go down to the bank, it's just this friction that makes it difficult for you to invest. You might have to
Yeah.
still be an accredited investor then, but now if you're an
Mm.
accredited investor, you can do it from the sofa of your house 24/7, right? And invest in something. Whereas previously, it's like you have to go down to the bank during office hours, you have to do all sorts of things, or you have to bring some sort of like, chop or something if it's investing out of a company, right? It's very different now,
Wow.
yeah.
Did that really happen?
Yes, iPhones were not around when we were in college. We are that old, somewhat.
Okay. Oh
Yeah,
dear.
yeah.
Yeah.
iPhones, I think, came out.
Okay.
First iPhone, I've searched it right now on my phone.
Okay.
I bet it's 2008. Before that was BlackBerry. Yeah.
Okay. Yeah, no, I was too young to apply for unit trust funds back then, so I wouldn't know.
Okay, the first iPhone was released by Steve Jobs in 2007, right?
Oh, that's when I
Yeah.
graduated from uni.
Yeah, so I mean,
Okay.
I'm a bit older than you, so I do remember that, where I used to have to drive, you have to get the GPS, or you have to print out the map instructions online from MapQuest or something like that.
Oh
And it's not
wow.
live, so when the roads change, then you are lost, right? Yeah,
Oh
very, very different.
dear.
Yeah,
Okay, yeah. It's amazing times we're in.
yeah,
Okay, Ted, one final question.
yeah,
For a TradFi professional, a banker, a PE investor, or a fund
yeah,
CFO watching this space, who
yeah,
crypto curious but
yeah.
hasn't engaged, what's one thing you wish they understood about RWA tokenization that they almost certainly don't?
Uh, I think I covered most of this before
Yeah.
already. Yeah, I think it's a lot of people got burnt before, right? When the gravy train stopped, right? And then
Mm,
because that happened, they just gave up on educating themselves, or educating others in this portion. But from what I've learned, scaling up so far in the past few years, right? Um, I think the tokenized structures that the family offices across Asia and Middle East, sorry, the tokenized structures are interesting to family offices across Asia and Middle East, right? But you need to sit down and patiently explain to them versus sell them a product, right? Um,
mm.
yeah, so I do hope that we can come up with more private
Dialogue?
in-depth conversations, dialogues. Yeah, because I kind of think that when the whole Web3 boom came up, there was a lot of noise, right? And then now it's
Uh,
just died down, right?
I
But then
see.
people might be afraid to actually talk about it, because sometimes they might be like, oh, I got burnt, doing it, and people don't want to even talk about how they got burnt before, right?
Mm,
So I think only if in a smaller setting, then you get
yeah.
to understand, like, oh, hey, why are you not interested in this before? Oh, because I invested in something and I lost money on it, right? But
Yeah.
actually, a lot of things are happening behind the scenes, right?
Yeah, yeah, for sure.
Electronic settlement payments, all sorts of things, right? It's all related together, right? If you look at
Mm,
how even China is doing, like yuan or e-yuan, and
yeah,
all these type
Ian,
of things.
correct.
Yeah, it all ties in together, right? Yeah.
Yeah, so we're all like, would you say you're cautiously optimistic about the
I
space?
think I'm I think I'm optimistic, because obviously
Okay.
the younger generation do understand it somewhat. They
Yeah.
they might not even understand the old stuff before, right? Like, if
Mm,
I told my nephew or niece that we used to have pagers or something, they wouldn't even know what a pager is, right? They don't even know, like,
true.
how the old phones used to be, right? They will hold the phone this way versus this way. Yeah. So I think eventually it will change, right? Yeah.
Yeah, for sure.
Yeah.
Well, Ted, I think that wraps up our episode for today. Thank you so much for coming on. And where can listeners follow your work and learn more about what you do?
Yeah, you can follow me on LinkedIn.
LinkedIn. Yeah.
Yeah, follow me on LinkedIn mostly. And I guess open invitation. I like to do smaller things. So if you're a family office allocator or a platform trying to understand RWA properly, yeah, do reach
Mm,
out, right? And happy to do something alongside Katherine, because obviously she's
yeah.
also very, very experienced in this field. She has seen many changes from her time at can I say your background? All the listeners knows. Yeah, your time from investment banking days to
Mm.
all the other Web3 firms that you have worked with, Yeah.
Yeah, likewise,
Yeah.
likewise. Yes,
Yeah.
Ted has seen me through
Yeah.
a lot of journeys. My
Yeah.
7-year career arc in Web 2 and Web 3.
Yeah.
Yeah, and I really enjoy working with you on the
Yeah.
Discord tokenization project. So I really hope
Yeah.
we can, collaborate more on future ventures together. Yes, send my
Yeah.
regards to Kiki and your
Yeah. So
lovely
are we doing
daughters.
something for Malaysia Blockchain Week? Are we going to do
Yeah,
a
maybe
private
so.
session? Yeah.
Yeah, let's
Yeah.
discuss more. I'll end the stream now. And
Yeah.
yeah,
Yeah.
thank you
Maybe we
everybody
should
for
do something
listening.
for university
Yeah.
students, like next gen.
Yeah, for
Yeah.
sure. Okay, thanks everyone for listening.